Hi sir, good afternoon. Today I'm going to talk about finance company. So first one, let's start with the definition of finance company. Finance company. First one, finance company. What is finance company? Finance company, which are primarily really organized for the purpose of extending credit facilities to consumers and industrial, commercial, or agricultural enterprise, either by discounting or factoring commercial paper on accounts receivable, or or by buying and selling contracts, leased, charter mortgage, or other evidence uh, or other evidences of indebtedness, or by leasing of motor vehicle, heavy equipment, and industrial machinery, business and office machine and equipment, appliances, and other movable property. So, finance company does not include banks, saving and loans association, insurance company, cooperative, and other financial institutions organized or operating under special law. So this is the definition I got from the Republic Act, Sec 3 Republic Act number 8556. That's my um, first definition for the finance company. So basically, a finance company is an organization that makes loans to individual and business. Unlike bank, a finance company does not receive cash deposits from clients. Um, they, they also doesn't provide some other services to uh, common to banks such as checking account. Finance companies make profit from the interest rate, uh, the fees the fee charged for the use of borrow money they charge on their loans, which are normally higher than the interest rates that bank charge their clients. Many finance company lends to clients who cannot obtain the loan from banks because of the poor credit history or um, etc. Um, most economists separate finance company into three major categories. The first group known as consumer finance company, makes small loan to individual, usually on the term on many term, which is suitable to their customer budgets and their nature. For example, uh, a client come to our company, um, because they need 200 to cover the rest of his month expenses, but he has no money left in the bank, and his next paycheck is 2 weeks away. The client go to uh, the client the client goes to the consumer finance company with the proof um, personal check, the proof of income, and the bank statement. Um, the bank statement, the bank statement to prove that, and let the company verify that he is still employed. And after that, and after several steps, the customer can receive the $200 for uh, in cash to pay for his expenses for the end of the month. But before he received the cash and left the company, he have to write a check, uh, promise to pay the check with the value as 230. It's meaning to say it higher than $30 than the cash he going to receive. That check going to be considered as the collateral, and as a collateral. So that is the first type of finance company. The second type of finance company is called a self-finance company or acceptance company. The agency makes loan to business to help those businesses cover short-term costs. Um, System, of course, except some company providers provide a service for businesses that is similar to the service um, provide above to uh, provide above is similar to the service they provide to their personal loan, like the first example. Um, the third the third type and also the last type of the finance company, that is the commercial finance company, which are also called commercial credit company, are the third type of finance company. They make loan to small and large businesses, often to help them cover for new equipment. Because they represent a greater risk for the commercial credit company, small businesses often pay higher interest rate than the large businesses. So I just give you the third type of finance company in the most economic right now. And next, we're gonna talk about the finance, um, the form of organization and capital requirements. Okay. Financing company should be organized in the form of stock corporation. At least 40% of voting stock of which is owned by the citizen of the Philippines, and shall have a paid of capital of not less than 10 million pesos. In case the financing company is located in Metro Manila and other first-class cities, 5 million peso in other classes of city and 2,500,000 pesos in municipalities provides, however, that no foreign national may be allowed to own stock in any financing company unless the country of which he is a national accords the same reciprocal right to the Filipino in the ownership of financing companies or their counterpart in entities in such country, and provide further that financing company duly existent and operation before the effectivity of this act shall comply with the minimum capital requirement within 1 year from the date of the said effectivity. I got this one from 66 Republic Act number 8556. Next, we will talk about why we choose finance company but not bank. The first point is finance company accept poor credit history. This one is depends on the different regulation between banks and finance company. It will allow finance company will take a risk higher than the bank, and then they can easier or faster to approve the loans, accept the loans to the customer. So in this case, finance company accept poor credit history. So whenever you find yourself have already had a bad credit to the bank, and for sure your approval may be reject from the bank. So there's no choice left. If you need money, you have to go to the finance company, and you have to the thing you have to shoulder is the higher interest rate, for sure, because the interest rate of the finance company they will rate you higher than their interest rate provided from the bank. And the second, finance company provide flexible term. The term can be 12 months or 16 months. It depends on their plan that the consumer deal or the contract between the lender and the borrower. And in this case, their finance company provide flexible term comparing to the bank. And Lastly, the third, the third point, fast transaction in emergency situation. And for sure, when you approve a loan to the bank, you have to wait for longer time than finance company. Like I said, because of the different in the regulations, so that the finance company will offer you a faster approval. So this is going to be one note for you uh, um, when you want to fasten their cash possession for your emergency situation. So finally, finance company take advantage over the bank by provides flexible and arranging loans. So that is my definition and um, the uh, definition and research about what is finance company and regulate some specific regulation about organization and um, the regulation in capital and why should we choose a finance company and the advantage of the finance company over the bank or other financial institution. So right after me, my group mate will bring or they will introduce more product come from a specific company in the Philippines. Thank you for watching.